Eric Sprott, Rick Rule, and Keith Newmeyer are three successful resource investors coming together for one simple reason: to buy cheap assets from distressed companies and seize this once-in-a-decade opportunity to buy gold, silver, and other mineral projects for pennies on the dollar. First Mining Finance Corp., trading on the TSX Venture under FF, a recently launched venture with the sole purpose to acquire advanced stage natural resource projects, and starting on day one with 18 projects. Management has already identified over 60 additional projects to acquire. Learn more about First Mining Finance at futuremoneytrends.com/investright. Greetings and thank you for joining us at futuremoneytrends.com. I'm here with legendary investor Rick Rule. He's a great teacher, libertarian philosophy, anarchist philosophy, and of course speculating in the resource market, which takes a lot of courage and a lot of Pepto-Bismol. Rick, thank you so much for joining us.
Pleasure to be with you. Thanks for having me.
Rick, for a Sprott investor or an investor who invests in one of these high-quality companies or people that you work with, like Lucas Lundin or Ross Beatty or Keith Newmeyer, over the next 3 to 5 years, what are they looking at buying at these levels? What kind of profits? I mean, are these going to be spectacular gains? Like the previous, times you've come out of bear markets into bull markets, what can they expect?
Well, you're trying to get me to say something inflammatory, so I'll do my best to humor you. My experience has been that bear markets are the authors of bull markets, both in terms of creating the need for the material, but also in terms of setting the bar very low to make it easy to overcome. This bear market has been the most severe bear market that I remember since the middle part, of the decade of the 80s. The recovery from that bear market, the 1992 to 1996 bull market, experienced the most dramatic upside that I have ever experienced. And my suspicion is that the recovery from this bear market will be dramatic too, if for no other reason than the depth of the base that we're working off of. The numbers that I see suggest that the TSXV resource index has fallen by something like 85% in nominal terms and 90% in real terms. In addition to that, we're finally starting to see the number of issuers disappear, as some of them get suspended or delisted, some of them amalgamate, and some of them go into businesses that they understand, like marijuana. This combination of fewer issuers and a rebound from lower prices is the stuff of wonderful, wonderful bull markets. We talked on your show before about the advice given to me by one of my mentors, Ned Goodman, which is, in a junior resource bear market, commonly portfolios held lose 50% in value. In this particular case, if the denominator is the TSX Venture Resource Index, the losses have been extreme, 85% rather than 50%. But what Ned pointed out is that investors who do the rational thing, having gone over the edge of the waterfall, that is repositioning their stocks and kicking out of their portfolio those companies that can't continue to exist, and repositioning with people who are well placed for the upside, including, of course, the managers' names that you've named, can enjoy 500 or 1,000% gains. Hence my slogan on your show last year: you've suffered through the pain, why not hang around for the gain?
Rick, I wanted to get your thoughts on kind of the opportunities that present investors. I know that you have stated before that you don't care about the commodity that you're going to profit in. There are a lot of people who do specifically look for, they want to give themselves that edge. So if you don't mind, I'd like to throw out some commodities at you, and then if you could just give us your initial thoughts.
Happy to do it.
Okay, copper right now.
Copper, I think, is going lower. I'm of mixed minds about copper, because you make so much money in the copper business when it works. Certainly 5 years from now, looking back, these will be the good old days in the copper business because copper assets are going cheap. In the meanwhile, you will see existing production shut in So making money in terms of perception in the copper exploration business is going to be very hard. It's a business that's been extraordinarily good to me over the last 35 years. And while I expect it to be at least as good, probably better over the next 5 years, I think the next 1 year is going to be painful.
Water.
Water is a no-brainer, except for the fact that it's very difficult to invest in. In terms of water stocks, you have to understand that they're basically agricultural stocks in drag. They use the water to produce agricultural commodities which are weak. The two bellwether stocks, of course, are Limonera and Boswell. And I would expect of the two that investors would want to concentrate on Limonera because of their real estate development activities in Southern California, and also because the citrus and avocado markets are stronger than the cotton and alfalfa markets where Boswell dominates.
Silver.
I like the silver business. I have been, as you know, much more cautious about silver for the last 4 or 5 years, and I feel pretty good about the silver business. Paradoxically, I feel good about the silver business because the copper, the lead, and the zinc markets are so lousy. And my expectation is that we aren't going to see very much by way of mine development in copper, lead, or zinc, and we're going to see some copper, lead, and zinc productive capacity shut in, which will reduce by a large measure byproduct silver production. Meanwhile, the very low silver prices that we're seeing are increasing industrial and commercial applications for silver dramatically. And in addition to that, retail silver demand as a consequence of the very low silver prices is very high. This traditionally takes supplies off the market. My expectation is that sometime in the next 18 months, we're going to see a shift where the physical market begins to drive the futures market. And my suspicion is that when that happens, people will be surprised in the silver market. And by the way, it's going to be hard not to surprise in the silver market because expectations are so low that silver will outperform expectations if it maintains a pulse. The amazing price escalation that silver exhibited in the 1970s, from a low, if my memory serves me correctly, of $1.30 to a high of $50, and the consequent increases in the price of silver stocks, Coeur d'Alene, of course, being the bellwether, advancing from a dime to $52, generated a band of adherents that can only be described as manic depressive. So certainly silver is the precious metal on steroids, both to the upside and the downside.
Interesting. How about gold?
I feel very good about the gold price. That isn't to say that gold can't test $1,000 on the low side again. But of all the materials I look at in the near term, I would think that gold probably has the best juxtaposition of risk to reward. It is hated except by very smart, very experienced, very mature investors who are in fact hoarding it. And they're hoarding it for very good reasons that we've talked about on your show. Mm-hmm. There is extraordinary confidence in the market right now. By the market, I mean in particular the U.S. Treasury market. And my belief is that confidence is misplaced. Soros said that he became a billionaire, George Soros, by finding popularly held public precepts that were wrong and betting against them. And my own anticipation is that the world's benchmark investment and saving instrument, which is the U.S. 10-year Treasury, is much less attractive than people think it is. And the consequence of that is that the principal competitor for gold, I think, is in some way, shape, or form a paper tiger. And I think that gold will perform as a consequence of that.
Gold in the face of rising interest rates or a bear market in the Dow, do you think it will respond as many investors would hope it would, that it would be a safe haven, or will it probably just be part of that sell-off?
Well, you asked me several questions there. People say that gold can't go up in an interest rate rise. I happened to be around in the decade of the 70s when gold went from $35 an ounce to $850 an ounce. in a period in time where interest rates escalated from 4% to 15%. So I know personally, from a matter of course, that interest rate rises, depending on why the interest rates rise, are not necessarily bad for gold. With regards to gold's safe haven status, I think that we have proven in the last 20 years that in the near term there's an interconnectedness between all ranges of financial assets and market liquidity. The consequence of that is that if we saw a flash crash, like we saw in 1987 or like we saw in 2008, the initial response of gold and gold stocks would be lower, because the sell decisions wouldn't be made by investors, they'd be made by margin clerks. What we see in both sets of circumstances, though, is that the 3-month, the 9-month, and the 12-month response is higher with regards to gold. I think that gold can survive a Dow bear market. I don't think that gold would respond, nor would gold stocks respond well immediately to that. And I definitely think that gold can survive an interest rate increase if the interest rate increase is a consequence of the fear of inflation and the fact that savers aren't being adequately compensated with present default rates for the depreciation of their savings that they would suffer. So I think it really depends on the reason for the increase in interest rates.
Back to the commodities. How about uranium, and then if you want to add in coal as well in that conversation?
Let's do them backwards.
Okay.
I think there's more room to the downside in thermal coal, in power generation coal. I think there's more room to the downside for 3 reasons. Coal's pariah status is a consequence of carbon, and the political classes wish to replace coal. The second would be the lack of demand for all things industrial, which constrains electrical demand. And of course, the third is global overcapacity as a consequence of very high coal prices 10 years ago. Now, met coal is a different set of circumstances. I see steel production bottoming here, and it doesn't really matter to coal producers where the steel is produced. The Chinese have a lot of overcapacity in steel, and the Chinese are beginning to displace exports from other markets, which makes people see steel production as falling. That's not true. Low-cost Chinese production is replacing high-cost production elsewhere, but the coal still gets burned. So the met coal market I see as probably an attractive speculation, given the fact that people hate coal. With regards to uranium, I could see it going lower before it goes higher as a consequence of a delayed restart of Japanese reactors. The Japanese restart has to do with 3 factors again. The first being, again, the lack of demand for all things manufactured, which means the Japanese electricity demand, at least from exporters, is constrained. The second thing is that the Japanese voters are leery about a restart because they believe, accurately I think, that they were misled by Japanese politicians and the Japanese nuclear industry with regards to the Japanese nuclear fleet. The final thing, of course, is that the Japanese have substituted liquefied natural gas, seaborne liquefied natural gas, for uranium. And the collapse in energy prices, but in particular the prices for seaborne liquefied natural gas, from $18 per million British thermal unit to $7 per million British thermal unit, has taken the pressure off the Japanese in the near term for uranium. Again, if you look at the 5-year time frame, this will look like the good old days in the uranium business. The truth is that much of the uranium that's produced in the world doesn't make any money at $40 a pound. In fact, it doesn't make money at $60 a pound. Yes, there is some low-cost ISL production, primarily in Russia and Kazakhstan, that is in fact economic at these prices. But if you look at the breadth of the uranium market, the truth is that the industry, including its cost of capital, is making U3O8 for $60 or $65 a pound and selling those same pounds for $40 a pound, losing $20 to $25 a pound and trying to make it up on volume. This is unsustainable.
Platinum and palladium.
Platinum and palladium have been absolutely crushed as a consequence of weak automotive demand and petrochemical demand. Again, you have materials being priced below the cost of production. It's ironic to me that the platinum prices fell as a consequence of the Volkswagen scandal. because the Volkswagen scandal had to do with understating emissions from diesel vehicles. The way that you control emissions from diesel vehicles is platinum. To have the platinum price fall as a consequence of a necessary increase in demand for platinum is laughable and says something about the psychological state of commodities markets that we're in today.
Now, I know you've said in the past that you don't have a favorite, but out of these or any that I missed, of course, like zinc, I mean, is there any of them that specifically where you're more interested in finding and investing in those type of companies that have a specific commodity because you think it will have more of a near-term price movement?
I'm really not. If you constrain me, I guess, to time, the one that I feel the best about is the gold price. If you talk to me, however, about returns over 5 years, total returns, I'm excited about the whole complex. I'm really excited about all of it. That doesn't mean that it can't go lower again for 12 to 18 months. But the total returns that people are going to enjoy in the commodities complex over the next 5 years, I think are going to be pretty spectacular. And spectacular, ironically, for once in the cycle, for investors, for speculators, for everybody.
I think that's a big concern from a retail investor standpoint, that it could go down more, that this is not the end, that they've heard that it's going to be almost the end for so long now. And I know that you actually made an not the argument, but you gave investors what they wanted to hear. I think it was a year or two ago at a conference. And if you could just share with us, why would the resource market remain in a bear market for the next 18 months to 2 years? Even if you don't believe it or not, what thoughts could you present, or an argument that the bear market would continue and it would get worse?
Well, that's easy. It's easy to see it getting worse. It's also easy to see it getting better, paradoxically. The worse argument has to do with the fact that the global economy is in very rough shape. Global equity prices and global debt prices, particularly denominated in US dollars, are doing fairly well, but that's as a consequence of low interest rates. That isn't to say that the S&P 500 companies in the United States haven't done a superb job of corporate efficiency. They have, and I'm not suggesting that they're grossly overpriced. What I am suggesting is that a lot of the income growth experienced by the S&P 500 have come about as a consequence of low interest rates, low cost of capital, share buybacks, returning capital to shareholders, and increased efficiency. It's difficult to see that bottom line growth continue to increase with no increase in top line sales. And so I think what you're seeing is a very weak global economy that is constraining demand for commodities in the face of fairly stout commodity supply that exists as a consequence of overinvestment over the last 15 years. I can't tell you when this is going to turn, but I can tell you that it's going to turn. Past is, in fact, prologue. And the truth is that periods of very high production growth during strong commodities prices are always followed by periods of capacity shut-ins as a consequence of low commodities prices. And we're in precisely that set of circumstance today.
In a recent Sprott's Thought Letter, you talked about the capitulation that you had expected maybe coming right now, or maybe happening right now, and maybe even over by the end of October. Is that still true? And did I read that correctly?
You did read it correctly, but the capitulation has not as of yet taken place. What we saw in the third week of August was certainly a wonderful prelude to capitulation. We saw numerous releases from places like Citicorp and Goldman Sachs questioning whether or not we were going to be in a commodities bear market for 10 years, which did a wonderful job of dashing hope. And I pointed out that when markets become reactionary as opposed to empirical, that commonly held perceptions become important. And one commonly held perception is that lots of bad financial things happen in October. It's the month of crashes. And so I talked about the fact that the psychological stage had been set in August for panic to occur sometime concerning October. That has not occurred yet. What's interesting, however, is that we are beginning to see issuer capitulation, which is something I've looked for 3 years. Mm-hmm. The recent announcement by Dalradian Resources, I think, is a trendsetter in natural resources finance. The Dalradian management team is a top quality management team, and they have a top quality project. They needed to raise some more equity to put in place a rational financial structure to put the mine in production. Precisely, they needed $35 million. And in order to get the $35 million, they did something that the mining industry hasn't done for 10 years. They priced the offering rationally, and as a consequence of that, the offering sold out. That message was not lost on attendees at the Precious Metals Summit or at the Denver Gold Show last week in Colorado. The issuers got the message. You can move your projects forward if you have capital, and that capital is available in this market from sophisticated investors if you price the offerings correctly. This is very important. This is the same circumstance that occurred in the year 2000 when we began a mini bull market in a pervasive bear market. That pervasive commodities bear market continued to 2002. But the best issuers with the best companies, the guys that came to market in 2000 and began to improve their projects, had their own mini bull market where, ironically, the overhang that was on the stocks as a consequence of their need to finance went away when they financed. And their ability to generate news in a news vacuum meant that the companies that were forward-looking doubled in 2000 and they doubled in 2001. They had their own mini bull market during a bear market that existed for other issuers all the way through the end of 2002. And I think we're in a circumstance right now where the very best issuers in the market are coming to understand that the returns that they can achieve by deploying capital outweighs the cost of that capital. And they know that they need to raise money, and the consequence of that is that they are beginning to price the equity offerings rationally.
That is great advice. Rick, one last question. The American population, it seems like the natives are getting pretty upset there. I know that you've let go of the political system in the sense that you live by a philosophy of do no harm and do what you do, all that you agree. You've got Trump, very popular, rising in the polls. You've got this guy, the socialist Sanders. Basically, the politicians are all in the low percentage range, at least on the Republican side. And then you've got these guys saying more extreme things, rising. Do you think that the American population, this is inevitably tied, or actually tied to the economy more than anything, this dissatisfaction with their politicians?
I don't. I think the dissatisfaction of the politicians is unfortunately due to a strange and relatively new cynicism on the part of Americans. I think that Americans have come to expect things from government. I believe that Americans now are avaricious in politics in a negative sense, the same way that we used to be avaricious in the economy in a positive sense. The truth is that people expect to benefit from the political situation in the same way that they intend to steal from their neighbors. There are a couple wonderful quotes that I'd like to leave your viewers with. One is, I guess it was either Ambrose Bierce or H.L. Mencken, I forget which, who said that the real definition of an election is merely an advanced auction of stolen property. And in truth, too many Americans are participating in that advanced auction of stolen property. The other more topical quote is probably that you understand the nature of politics by examining the origin of the word. Poly, of course, from the Latin for many, and tick from the English colloquial for small blood-sucking insect. Americans are becoming interested in politics because there's too many of us, and we're ticks. It's interesting that among the Republicans, at least, it would appear that the electorate believes that the primary qualification for office is no experience. In other words, the established political participants from the Republican Party enjoy the least favor. Now, I am certainly not anybody who holds out any hope that Donald Trump would be anything but a major catastrophe as a president. I just don't think he's worse than anybody else who's running. And it is amazing to me that 25% of the electorate from a major political party would like to see the advancement of an avowed socialist. I think those people who support Saunders need to talk to their counterparts in places like the former East Germany or Cuba or Russia or China or North Korea and say to those people, listen, how did that work out for you? How did that experiment work out for you? You know, I guess the flight of Cubans to Florida is an illustration of the benefits of free markets and socialism. In my experience, I've been to Florida a few times. I didn't notice any particularly strong outmigration of people from Miami to Havana. And I think that people need to look at that statistic when they think about the policies espoused by Mr. Sanders.
It's a great point. It's funny you mentioned that. I'm actually in Florida right now as we do this interview. Rick,
well, perhaps you can look out your window and tell me whether or not you think I'm right.
Rick Rule of Sprott Asset Management. If there's ever been a time, people, to invest with Rick Rule and this amazing organization he's with, Sprott Asset Management. I've met these people at all the conferences. I've had a chance to talk to them, have dinner with a few of them. These are the best. This is the cream of the crop. The bear market, just as Rick has said, it's this TSXV is down 85% in nominal terms. And here you've got the cream of the crop, the A team, and you can invest with them. Rick, if somebody wants to invest with you guys, do you have a number handy, or should we just go to the website to set up an account?
The easiest thing to do is go to the website or else just email us at contact@sprottglobal.com. Failing that, if your readers would like to, they can contact me directly. I don't hide from the people. I'm at rrule, that's RRULE, at sprottglobal.com. And people in the United States and Canada, I know you have a worldwide audience, but people in the United States and Canada can call us toll-free at 800-477-7853.
Well, Rick, thank you so much, and I encourage all of our listeners to, this is the time, guys. I mean, right now, this is a great time to partner with Rick and Eric Sprott and their whole team. So, Rick, hey, thank you so much, and I'll see you at the New Orleans conference.
I look forward to it. You know, in addition to learning a lot and making some money, it's possible to have some fun in New Orleans.
Well, I'm bringing a 1-year-old, a 4-year-old, and a 5-year-old, and Brian told me that it was a great place to do trick-or-treating, so I'm trusting him. He told me to go to the neighborhoods, though, not the French Quarter.
Yeah, I was going to say, I'm not so sure I'd like to take young kids out in the French Quarter on Halloween night. You might see the reason for that, but there's some New Orleans neighborhoods which are wonderfully family-friendly.
Great. I'm looking forward to the food, too. I've never been to New Orleans.
Well, go on a diet now.
All right, sir. Well, you have a great day. Thanks for your time.
Pleasure. Thank you.